Hey guys, Talkaholics, thanks for being here today. The product tankers recently had a blowout quarter. I've listened to a few companies. Today I listened to a conference call, an earnings call from Ardmore Shipping and another one from Scorpio Tankers. In this video, I wanted to kind of share some of the big themes that these guys were talking about, and we'll do that in this video today. Okay. So first of all, like I just mentioned, they've been seeing tremendous rates for the past quarter or so. That was the big theme. Robert Bugbee of Scorpio Tankers, he believes that this is much like the period of 2003, 4, 5, 6, that he thinks that it's this market has some legs. Ardmore Shipping also seems to share that kind of a view. There's a quote from them as well. There is no practical upper limit for charter rates. They've been noticing that there is a lot of interest for charterers and on long-term charters at much higher rates than they had in the recent past. So this is a lot different from the situation in 2020 where there was that kind of contango. You didn't really see long-term high charter rates during that time. And today that you are starting to see that, okay? The next theme they had, by the way, they had a theme of global economic reopening. So just like before where there's high rates, they're seeing that is largely demand driven. There is increasing demand for jet fuel, diesel, gasoline, all of these kinds of things. And around the world, there is very low fuel inventories still. There's a lot of difficulty in meeting demand with supply. The world seems to be very thirsty for fuel after reopening. There's another big theme out there with Russia. These two companies seem to have opposing views on the impact that this is having on their market. There's some mixed signals. So one company says that they have not seen significant changes in trade patterns. That is Scorpio Tankers. And then Ardmore was basically saying that they are seeing some differences in trade patterns. When I look at the product tanker rates, you can clearly see that the rates began to spike right when the Russian invasion started. So if I was to pick one, I would lean more towards the idea that I think that Russia is significantly impacting the product tanker market. But there's a quote that's from Scorpio that kind of argues the opposite. At a high level, it may appear that Russia's invasion of Ukraine is the driver behind the current strength in the product tanker market. While it certainly created significant commodity price volatility, we have not seen shifts in Russian refined product exports going to Europe. Year to date, European imports of Russian refined products have increased slightly year over year. So they're saying that there's still a lot of those refined products going directly from Russia to Europe. And the European diesel deficit is less about the conflict and more about a reduction in refining capacity and a shift to renewables. They also go on to say that this is likely to change because by the end of the year, the Europeans, if they go through with their plans, are going to ban themselves from Russian fuel imports of all types. Okay, so next big theme, which that last quote kind of touched on, is that there's a big structural shift in these refining capacities around the world. There's a lot more refineries being built closer to where crude production is, particularly in the Middle East, instead of those oils being delivered to places like Europe, Australia for those to get refined. Instead, they're kind of being refined near their countries or at those countries where the oil is produced. And then that clean product is being transferred to these other Western countries, probably in an effort in these Western countries to kind of go towards that decarbonization. But at the end of the day, they still need these oil products, right? Okay, so here's a quote for that idea. Similar to Europe's diesel deficit, and regardless of the conflict in Ukraine, there is a global mismatch of refined products. However, continued improvement in demand as the global economy reopens from the virus has exacerbated this mismatch. For several quarters, refined product demand has continued to outpace supply. Despite an increase in refinery utilization inventories, they remain at historically low levels, and the increase in supply has not been enough to offset the increase in demand. This has been most evident in the global diesel market, but similar scenarios exist for gasoline and other types of refined product. The supply and demand mismatch becomes quite clear when looking at the refinery margins, which reached record levels and remain extremely strong. Those refining margins have begun to go down recently, but they're still at these very high historical rates. We view elevated oil prices and refinery margins not as temporary, but rather reflect consistent underinvestment in the supply chain. Reason Brent crude oil is currently trading at 112 per barrel while diesel is trading at 140 is because there's not a shortage of crude oil, although that may come later, but a shortage of this refining capacity. Put differently, global refined product demand is at above or pre-medical event levels. More refining capacity is lower and more dissipated than before that event. This has led to an increase in seaborne export and ton-mile demand for refined products as product tankers serve as the conduit to reallocate refined product barrels around the world. Okay, next theme, there's an idea of global slowdown. What would happen if we see that kind of a global slowdown? I think there was a question from one of the analysts on that call, and one of the companies, they responded, "We believe the product tanker market is being influenced above all by the energy crisis." I think that's true in my opinion, because if you look at basically any energy related commodity, even though we've seen a big pullback in all kinds of metals and things like that, coal, natural gas, gasoline, oil, all of these are still at tremendously high levels. So that is kind of those commodities prices are agreeing with this idea. We are in an energy crisis of some type. While the prospects of a global slowdown should temper expectations, there is growing consensus that the energy crisis will not be resolved anytime soon. So even if all the doomsayers out there are correct and we go into a global recession, it seems unlikely to solve this issue with this underinvestment in the oil supply chain and the need for getting these energy products to where they need to go. Meanwhile, product tanker supply demand fundamentals also look favorable. That's the next point, which we can probably get into. There is still, even though you have very high product tanker earnings last quarter, there is still very low orders happening. You still have a record low order book on a percent of fleet basis over the last quarter. One of these companies says that they expect more orders, and I would too. The longer you have these higher rates, the more these guys are going to go and reinvest in their business and order ships. It's inevitable, but so far we have not seen it. And the big constraint, just like I mentioned recently in my bulkers video, is that there isn't any capacity to build these new ships. So just like we're seeing that there is probably underinvestment to meet this demand-driven spike in fuel products, there's underinvestment to meet this new demand of ships that is happening in all of these global shipyards. There isn't the capacity, even though these product tanker companies are making a lot of money, there isn't the capacity for them to really go out there and order a tremendous amount of ships yet. That eventually changes. There will be a time when they will, as long as these rates continue, they will find a way, and there will be a way for there to be increasing capacity in these shipyards. That is the way these cycles have historically always gone. Okay, but that's it. That's a brief update on these product tankers conference calls. There's some more crude oil conference calls I'll be listening to in the coming weeks. Be curious to hear what they say, and I'd also be curious to hear your thoughts on what you think is going on. Do you think this market has legs, or is something going to turn around and, I don't know, change the market? I hope not. I don't think it is, but be curious to hear some of your thoughts in the comments. Have a great day.